Good morning, everyone, and welcome to the DecisionPoint Trading Room. It is June 12th. I am Erin Swenlin, and this is the Trading Room. Carl is not able to join us this morning. Everything is fine. He just needed a break. So you're with me for the entire Trading Room today. I do have my moderator in the chat room. Fred is there to welcome you. I'm also going to set him up as a panelist. Since Carl isn't here, he'll be able to make sure that I share the right screen and do all of the things I need to do here. So let's go ahead and get started. I'm going to go ahead and go through the market and let you know what's going on across the market: Bitcoin, dollar, gold, oil, bonds. And then we're going to go ahead and look into the sectors and find out which sectors are leading and which ones maybe aren't doing so well. And then we'll dive into a few industry groups and see what looks good right now in the market currently. Okay, so let me go ahead and share my screen and let's get started. I'm feeling a little under the weather, so if you can bear with me. All right, so as you can see, we have been traveling slowly higher. Currently, we do have what's called a filled black candlestick. Let me make sure that that's the case with a zoom thumbnail here. Not a filled black candlestick, which is good because filled black candlesticks are bearish formations. So far trading today looking pretty good. We had a bit of consolidation. We're starting to move back up. Carl and I are of the opinion that we're probably going to see a little bit more sideways movement with a little bit of a trickle upward at this point, given that the Fed announcement will be this week, and people are probably kind of sitting back and waiting to see what's going to happen with that. We have the RSI positive, PMO is rising. I'm noticing that the VIX did come up and puncture that upper Bollinger Band, but instead of giving us a big decline, we ended up just with some consolidation. So that's a good sign right there. We're also seeing that VIX oscillating above its moving average on our inverted scale. We do invert our scale on the VIX so that we can see overbought on the top and oversold on the bottom. And with the VIX currently being above that moving average, that does tell us there is some internal strength to be had in this market. And if we go and look at stochastics, they're also looking very good above 80. When you have stochastics above 80, usually you're going to see some good movement in the market to the upside or in whatever stock it is you're looking at when stochastics are above 80. So that's why we're always looking for that. Our indicators have been acting very interestingly of late. These are our short-term Swenlin trading oscillators, and then this is also the ITBM and ITVM. So these are our short-term, and these are our intermediate-term indicators. As you can see, the STOs have been really jagged, if you want to know the truth. We've seen them kind of moving up and then kind of moving down, and they have been not necessarily traveling in concert with each other. They are on the overbought side, but they did pull back from overbought readings. That was a little bit of a concern on Friday, seeing those STOs moving lower. But that wasn't confirmed by our intermediate term indicators, which are still rising nicely. And in fact, the ITBM managed to get above the zero line here. So that's very positive. So we're not seeing anything in the market currently that would suggest a big decline in any case. Let's go ahead and look at our bias chart, and then we'll get into Bitcoin. So our bias chart, this is where we have our Silver Cross Index and our Golden Cross Index. The Silver Cross Index measures how many stocks have a 20-day EMA above the 50-day EMA. So we're looking for stocks that look like the market right now with a 20 above the 50-day EMA. And as you can see, we're seeing more of those coming in with the stocks in the S&P. We also had a positive crossover on our Silver Cross Index, and that is what we call a shift. In this case, a bull shift on the Silver Cross Index. We're waiting for the same shift to happen here on the Golden Cross Index, and we're not seeing that just yet. But given that we have more stocks above their 50 and 200-day EMAs, tells us that Golden Cross Index is going to improve. The Golden Cross Index, I'm sorry, I didn't say, it does measure how many stocks have a 50-day EMA above the 200-day EMA. So if we have more stocks above the 50 and the 200-day EMA than what we have on the Golden Cross Index, that does indicate that the Golden Cross Index should be able to continue higher. So the bias chart tells us that we do have a bullish bias pretty much in all three time frames. I'm still listing our long-term bias as neutral, simply because the Golden Cross Index is not above 50%, and it also hasn't had that shift above the signal line like we saw on the Silver Cross Index. All right, let's get into Bitcoin. It's been looking like this. We've had this big rounded top, very bearish formation, really hasn't been able to get itself out of this rounded top, and it's still looking that way. Now, if we get a breakout here and it does disintegrate this or really put some pressure on this rounded top, then we might be looking at Bitcoin as ready to rally, but currently not looking that good. We need to see more stocks. We see, I'm sorry, again, I've been under the weather here. We have a rounded top on Bitcoin. We're looking for a breakdown, and the indicators currently are not telling us that we're going to get the breakout. So we have a negative RSI, we have the PMO, which is below its signal line and falling, and stochastics look pretty terrible. They are in oversold territory, but really with stochastics, I'm more concerned about the actual reading on it. And currently it is below 20, and that is very weak. So Bitcoin not looking too good right now. The dollar. The dollar has been very interesting in that we've seen kind of a double top formation. In fact, let me go ahead and I'm going to move this into a solid line chart just so we can see. Big double top here. It hasn't, the double top hasn't been extinguished yet, because this price right here will have to get above these two tops before this double top is gone. So there is a bias here on so there is a bearish bias here on UUP. I'm looking at this, and I think you could make a case for, well, I don't think you can make a case for it. It kind of looks like flat tops and rising bottoms, which would be a bullish formation. But I think at this point, what we really need to focus on is this bearish double top on the dollar. It looks like it wants to rally. It looks like it's going to go for another chance here at that area of overhead resistance. But unless we start seeing this PMO looking a little more healthy, I would be still expecting a move to the downside. GLD, gold has pretty much the opposite look. What I'm noticing that's very, very interesting, and I'm going to flip back to the Bitcoin chart, but we do have sort of a rounded top going on here in gold. Looks very similar to what's going on in Bitcoin. So this started in March, and it's rounding off into current readings now. Let's see, what was Bitcoin doing? In March, it started to round off as well. This is a really, I'm just seeing this as we're looking at the charts right now, that Bitcoin and gold have a very, very similar look. Not sure what to make of that, but certainly interesting. Maybe we're talking about people looking at these different instruments, and gold being on the one hand and Bitcoin being on the other, something other than being in the stocks. All right. So gold rounding off. It doesn't look that healthy to me. And, with the dollar not looking so good, this could give gold a benefit, but just looking at gold on its own, it doesn't look that healthy here. You can see that the rising bottoms trend line is holding up, but we've annotated a rising wedge. This isn't a rising trend channel. So we are very vulnerable to seeing gold break down here. And if the dollar doesn't cooperate and the dollar does continue to rally and does manage to find its way out, then of course gold is going to have some major headwinds. Right now, I think that gold is going to continue to consolidate sideways here for a little bit until the dollar starts to make its way downward. So I'm looking for good things out of gold, but I have to say, looking at this alongside Bitcoin, which has that big rounded top, that does leave me feeling kind of bearish here in the very short term about gold. But again, this dollar chart at double top, if we do see the dollar fall, that's going to help gold. Let's look at crude oil. Crude oil has been all over the place. We've been pretty bullish on crude oil, so seeing this big gap down is not what we want to see. But the PMO was already giving us some flashing warnings here. And we can see with this big gap down, this could be a breakaway gap to the downside. I would not be too worried about it falling below this support level, though. When you look at a longer term chart of USO, you can see we've really been in a big giant trading range. And I would imagine, as Carl would say, is that we are going to see this trading range persist. You've got the stochastics moving lower. You've got a brand new PMO sell signal, and the RSI is negative. So we have to consider that we're going to lose some more strength in USO and crude oil. That's going to make the energy chart real interesting. So we're going to definitely spend a little time on that when we look at our sectors. TLT bonds forming a cup with a handle here, but now we're looking at a big bearish engulfing candlestick. I'm looking at interest rates that are going to be rising. That's going to put pressure on TLT to the downside. In fact, let's go look at those first. You can see that really most of these interest rates are in rising trends, and they don't look like they're being compromised at this point. And in fact, even in the short term, we're having these little short-term rising trends. Now, the short-term the yields, the very short-term yields are all over the place right now. But when you get to the 2-year and on up, you'll see that we tend to be in rising trends, and that this level of 3.4 is holding as kind of a support, a foundation for all of these interest rates currently. But I see interest rates rising. This chart really doesn't suggest to me that we're going to get any downswing in interest rates. And that, of course, is going to put pressure on bonds. The 10-year yield in particular looks like it's ready to break out. If it does not break out here, guys, it's going to form a pretty ugly double top here. And of course, we'd love to see a double top on the 10-year yield. We would love to see interest rates moving lower. That's going to help the market. Currently, they're in a holding pattern. I'm still expecting an upside breakout here. RSI is positive. PMO is rising. Stochastics are staying in positive territory. These guys usually twitch and move very quickly. And the fact that they've stayed in this positive area does give me a positive outlook here for TNX. I'm expecting an upside breakout. And that's going to put pressure on the market, unfortunately. So back to TLT. It's been in a major trading range here, looking a little like crude oil on the side there. So I'm expecting a drop to this level of 98 on TLT, certainly vulnerable to a move even lower, but I'm going to hold up on the 98. That's where I'm going to expect to see the rebound, mainly because we are in this trading range. That will give interest rates that move to the upside that we're expecting. And then once we hit this level, we'll be able to get a better idea as to whether bonds are going to be able to hang tough or not. I think that covers it for the major stuff here. So let's go ahead and look at some of our sectors and what is going on there. And then we will leave lots of times for your symbol requests and questions. I didn't go over that at the beginning, but your symbol requests and questions belong in the Q&A box. Chat room is for you to talk amongst yourselves. And Fred is in there moderating the chat if you are interested in finding out what's on the mind of other traders that think very much like you, because they are here. They are interested in the decision point analysis process, and so are you. So you might have a lot in common. All right, so this is my candle glance of all of the sectors. Where I want you to pay particular attention is our price momentum oscillator right here. This is where we're determining how much momentum is going on in these sectors, whether there's new momentum, loss of momentum, and just gives us an overall health of the market. Interestingly, what we're noticing here, at least that I'm noticing, is comm services, real estate looks a little bit toppy here on the PMO. But comm services is looking like the weakest sector here on this map of the candle glance. The PMO is topped on comm services. I was talking last week, I do a Twitter thing, a trader tip every week for Business First AM. And one of the things I talked about that I had read about is, right now we're going through these Hollywood strikes currently. Writers Guild is getting ready has been on strike, I believe. That's already put Netflix in a bit of a quandary on some of its programming. I understand Stranger Things, which is, I've yet to watch it. Everybody says I should, but I've heard that they had to delay their season drop because of the strike that's going on. And there's more than just the writer's strike. There's other strikes that are being discussed in Hollywood right now. And that is putting some downside pressure on some of these entertainment communication services stocks. And maybe this is just the first crack in that pavement, in that foundation that we're seeing here in comm services. So be really careful with this one. Netflix would be the other one to concern yourself with. In fact, I hate to be jumping around, but I want to jump around because we're talking Netflix. I want to look at our top 10 capitalized stocks in the S&P just to get a sense of what's going on here. So currently you can see that Adobe is your biggest winner currently of our mega cap stocks that we pay attention to. Facebook coming in a close second here. Netflix, though, notice of all of these mega caps, Netflix is the one that's suffering here. This is kind of a little bit of a warning flag coming to you from DecisionPoint, is to be very careful with Netflix, be very careful with what's in comm services currently. For those of you who are members, those of you who aren't members, I do want to show you our website very quickly here. This is our blogs and links page. Free members, you can come in here and set up a login if you would like, and you can get our free material. We do post some free material. This is last week's trading room, and we do have articles periodically that are free that you can get to. But what I wanted to show everybody is our sector chart list, our chart lists that we have for our members only. We have our DecisionPoint alert chart list. This has all of those charts that I was just showing you about the market. You can see right here. So you have access to all of those charts as a member. We also have our under the hood indicators chart list, which is what I'm getting ready to show you, which is what prompted me. This has all of our under the hood indicators, our participation indicators, our golden and silver cross indexes. Those are on all of these charts for the major indexes, as well as for the sectors. And then we also now have it for some of the major industry groups like gold miners and biotechs. We didn't talk gold miners, but since the chart's here, I can tell you that at this point, I would be very careful with gold miners. I think gold is going to be doing well here coming up, but we need to wait for the dollar to fail. And gold miners, while we're seeing some participation under the surface, it's certainly not enough for me to look for a breakout at 33. It's more looking like a test of 30 is ahead there. So anyway, we have all of those available, but we also have now just started our ETF tracker chart list. And the tracker chart list, it's a very long list, but it does have all of the major industry groups in it, the ETFs for them. So you can go in, they're not annotated. There's a lot of them here, but that's a way you can just go through and look at some of these major industry groups on our website. Now, where were we? Comm services. So you can see a little bit of a crack in the foundation here. I'm using that term a little bit often today. But you can see that there are problems right now with participation starting to break down a little bit. And obviously you can see that the relative strength has been moving lower on these as well. And again, that was the big warning sign I'm seeing, is that PMO turning down on comm services. Let's view them all one more time. Discretionary is off to the races and it is cruising. Technology, we did see a little bit of a pause here. This is looking very much like a flag formation, and we're getting the breakout right now from the flag. And then this is the very important thing I'm seeing with technology right now, is a surge above the signal line. Technology to me is looking very, very healthy. We'll look at it more closely when we get back down to our under the hood indicator charts. So technology looking very interesting to me. We have a brand new buy signal on utilities. These two are kind of opposite ends of the spectrum. This is your most aggressive group, XLK, and this is probably one of your least and most defensive groups. Least aggressive would be utilities. So we're seeing action on both sides of the fence here, which is telling us that we have a broad market rally here. This is why Carl and I have gotten more on the bullish train, because before it was just the mega caps, and now we're seeing across the board participation. We're starting to now see all of the sectors getting new momentum or building current momentum to the upside. Energy, we're going to want to take a look at because crude oil is going to be putting some downside pressure on it. Utilities, like I said, looking good. And technology, I definitely want to take a peek in there. We have a new crossover buy signal here for healthcare, but we are still in a declining trend on healthcare, which is a bit of a problem for me. So let's dive in. I want to look at technology, and we're going to look at utilities, and we're going to look at energy. So let's get back to those. Like I said, discretionary cruising. I don't think we need to worry too much about discretionary. So let's look at energy, which is getting a lot of pressure from crude oil right now. It hasn't completely broken down. We still do see rising trend in the works here. We do still have a positive RSI, and the PMO is rising pretty nicely here. Notice that we have great participation. It is breaking down like we saw in comm services, though. We're getting a little bit of a decline here in participation. And I would bet that today, on this big decline that we're having of over 1%, I suspect we're going to see a little bit more of a breakdown in the participation numbers here. And that's going to tell us that we need to be very careful with our energy positions. I know, admittedly, in diamonds, we went toward energy, I think it was 2 weeks ago, last week, 2 weeks ago. And those positions need to be tracked closely. Technology, we were looking at, and utilities. Technology under the surface, very, very healthy. It is in cruise mode here. We are seeing at this point an increase in participation. This is an interesting thing, though, seeing such a low number in stocks above their 200, because look at where technology itself is, XLK. It's way above its 200-day EMA. And typically, when you're looking at sector charts, most of the charts within that sector are going to be very similarly configured. But obviously, there are some major laggards here because there are fewer stocks above their 200 than above their 20 and 50s. And the 200-day EMA should be the very first thing that you overcome. And then you start to overcome your 20-day EMA. So this is kind of interesting to see that we have fewer above their 200-day. So it does tell you that there is kind of a wide variety in technology, which we know that there are, but that means that there are a lot of stocks that aren't participating to the degree that these others are, that you can see above their 20 and 50. Stochastics looking good here. And notice relative strength, which was fading on this move that was sideways. We're now starting to see some movement and relative strength for technology as well. It's a good thing to see technology doing well. That is good for the market. Utilities doing well isn't always good for the market, but certainly they are doing well. And they're coming they're in a trading range, and they've come off of that bottom of that range. We're about halfway through the range, which always makes me nervous as far as getting involved in something when it's in the middle of the trading range, because it's, you're kind of at a disadvantage. You've already lost half of your move off the bottom of the range, and then you're vulnerable to it pulling back to the bottom of the range, and only half of and getting only half of the rise when you're in the middle of the trading range. So I'm not really thrilled with that look, but it does look like it's headed to the top. Our PMO is on a buy signal, which looks great, and stochastics are above 80. Participation breaking out or breaking down just a tiny touch on Friday, but ultimately I think utilities look pretty healthy. But you know what? If technology is doing well, I don't know that utilities is where I'd want to be. Technology is going to give us a lot more upside potential than the utility stocks typically. All right, so let's go ahead and look in the industry group summary. If we look just on the industry groups themselves, let's do the scooter report for the industries right here. These are the big movers currently. I don't know these actual symbols, but it looks like clothing accessories are doing very well. Durable household products doing well as far as the scooters are concerned. And steel looking very interesting today. All right, let's go ahead and look particularly in those industry groups that we want. The industry summary right there. And we're going to take a peek into technology. And we can look at utilities as well, since there's not so many groups there to look at. We'll look at utilities first. So where is the strength coming from in utilities? Gas distribution looks pretty good, but it's in a little bit of a declining trend. This looks very flag-like, though, which is very bullish to have a flag. And a break above the 50-day EMA on this group looks very encouraging as well. Stochastics above 80. So gas distribution looking pretty good here. Multi-utilities, a little bit toppy there right now, but PMO on the buy signal, stochastics above 80. Conventional electricity looks pretty much the same. Water looking pretty good as well. I would say, given the look of all of these, I think that all of the utilities industry groups look pretty healthy. Gas distribution, it is in a little bit of a declining trend, but honestly, upside potential when I see a flag formation like that. Gas distribution looks particularly interesting in there. I'm going to start at the bottom, renewable energy. We've put that in technology, and it is a highly aggressive group, but it is not doing that well. It's having a good day, but overall, it's been in a declining trend. I kind of keep an eye on renewable energy because it can be a really great spot for some nice big rallies. Unfortunately, lately, those rallies have been straight up, and then trying to get involved in them, you end up in there a bit late. But noticing that the renewable energy industry group is in the decline currently. So not the space in technology to be looking. Renewable energy not looking that healthy. Electronic equipment, really nice breakout here above the 200-day EMA. Notice also a silver cross of the 20 and 50-day EMAs. So electronic equipment looking particularly bullish. Computer hardware, this is Apple basically, and it is doing perfectly fine in a nice, beautiful rising trend. This is a winner that's going to keep on winning at this point. Telecom, flag formation, it is starting to break out from that flag, so that looks good. We do have a rising trend. It stayed intact. Price bounced off 20 and 50. PMO looking like it's surging now above the signal line. You'll hear me talk about a PMO surge. This is a new nomenclature for DecisionPoint, but a PMO surge is when the PMO bottoms above the signal line. We find that those PMO surges tend to lead into something good because you're usually looking at a stock that's doing well, which is why its PMO has been rising, which is why it's above its signal line, but then it's going to pull back or it's going to take a pause, and that will move the PMO back downward. But then when it's ready to get back going and starting, it will surge. It will move back up. You'll get a bottom above the signal line on the PMO, and that's what you want to look for. We're in the process of putting together a brand new product called the DecisionPoint Scan Alerts. And what we're going to do is, rather than with DecisionPoint Diamonds, where I do all of the culling for you, we're going to give you straight up the results to all of our primary scans that we run to come up with diamonds. So you'll be able to subscribe and get those downloads at the end of every market day, all of the stocks that are fitting within our DecisionPoint analysis process requirements. So keep an eye out for that. We will be announcing it when it is ready. We're hoping to get it out in the next few months, and hope you'll find that very interesting. If you're in the trading room, you probably will really want to have that, because I know for me, I want as many symbols in front of my face as possible to look at, but at the same time, I want them to be within my parameters, the things that I look for. And that's what these DecisionPoint scans do for you. All right, telecommunications. Flag formation, breaking out. Computer services, looking good, breaking out, moving straight up. Electrical components, really surging nicely, moving up quickly, getting ready to break. It looks like it is breaking out currently. Semiconductors are getting back started again. Nice surge above the signal line for semis. Software getting started again. Although its PMO does not look good on software, so be careful with those. And then, like I said, we already know that renewable energy not doing well. All right, so that pretty much covers our sector and industry group analysis. Let's go ahead and move right on into your symbol requests. I'm going to look and see if we have any questions. When to trade based on secondary indicators such as MACD or RSI divergence versus price in not changing much. An example would be PayPal. Okay, well, we'll look at your example in just a moment. Long tail on UUP. Is that a data error? We thought it might be a data error on UUP. Let me show you the chart so that we're looking at the same thing. So there is this one, and we did think it might be an error, but apparently it's not, because all of the other services, data services, are listing it as that. We've chosen to kind of not pay attention to that big tail there. It does make the double bottom kind of a really weird looking thing. We're just not going to include that. And you can do that in technical analysis. It's perfectly fine, but you just want to say up front that you're doing that. And I didn't say that when we were going through it, but yes, that long tail is kind of a weird thing, but apparently it is not a data error. Do you have access to our chart list? If so, where? Yes, Luigi. Again, right here from your members page, right up here, DecisionPoint Alert chart list, click on it. You're going to get all of those DP Alert charts, including some that we don't always show, which would be the 5-minute, the advanced decline lines. These are some of the things we look at every day, but we don't post and talk about every day. The website is decisionpoint.com. My sound is garbled at times. I'm sorry about that. There's not much I can do, unfortunately, today. Should we be concerned with options expiration this week? Concern, I don't know. I think that at this point you should be aware. Certainly with options expiration, we could end up seeing some short covering, or the opposite, seeing some calls going away. It'll be interesting to see what happens, but mainly we should just be prepared for lots and lots of volume and usually very little price movement on those days. You're going to typically see, let's see, I've got a better chart to show you here. So you'll see these days right here where you're going to get really high total volume on options expiration, but a lot of times you're not going to see a very volatile price movement because it's kind of this give and take between the just, from short covering and so you're going to end up with a lot of extra options expiration. You're going to end up with a lot of extra volume. But as far as worrying about it, I don't know that I'd be necessarily worried about it. Boeing, BA, is it in XLI? Let me look really quickly for you, but I believe it is. Yes, it is in the industrials. It is in aerospace industry group. All right, so let's get started on some of these requests. Advanced auto parts. Well, I can tell you just looking at this chart right now, it's not something that I'd want. I don't know what the big decline was here. I'm going to guess something earnings, news related. Certainly this has been really beat down and it's very oversold, but the PMO isn't quite turning up. And honestly, even if the PMO does turn up, any kind of positiveness is going to turn that PMO up at this point. I don't know that I would trust it to be something that's going to get you a really big rise. If I owned it and I had to, suck up this loss, I would continue to hold it at this point. I don't think you have anything to lose really because the PMO is turning up, but I wouldn't be buying into this decline. This is a really beat down stock. And again, I don't know what caused this, but whatever it is could still come up and rear its ugly head, as they say. So I'd be very careful with this one. And just as a quick discussion, I'll do it on the next one, Caterpillar. Okay, so what I include on these charts is the RSIs at the top. Our PMO, of course, is a primary consideration to me. I like to have the OBV. That gives me a sense of what's going on with volume. Because notice here, the volume bars seem to be kind of moving downward, but the OBV is showing rising bottoms. So that tells me that's confirming this rally. The OBV is a really great volume tool. It's not hard to understand. If the day closes upward, you take all of the volume for the day and add it to the OBV line. If it's a negative close, you take all of the volume and subtract it from the OBV line. Very simple. There's certainly different ways to do it, but I love the OBV. It's easy for me to understand. What you're looking for are rising bottoms with declining bottoms. That's your best positive divergence or confirmations like we're seeing here. Stochastics, I like them above 80. We already discussed why. and you can see relative strength. I compared the strength of the group to the S&P. So we want to make sure we're in a strong group. And then I compare the stock to the S&P. But then the last thing I like to do is compare the stock to its industry group. I like to find the leaders in an industry group. And if a stock is outperforming its group, you're going to see it generally outperform the S&P. We often say that a stock's movement is half of a stock's movement is the sector and the industry group it is in. So you want to find strong sectors and strong industry groups in the stocks that you select. So that's what my daily chart is. We're going to be paying attention also to the golden and silver crosses. We have a silver cross right now. A golden cross just recently happened. Really like the look on this chart. Nice breakout above this level here of overhead resistance, which is pretty strong. We've got a number of touches here. You've got the touch here, the touch there, and really you could say the touch is up here, and price is above all three of those levels. I like the look here. I certainly think that this is purchasable. The RSI is getting a little on the overbought side, but all of my other things that I look for are working. The weekly chart, it's a really nice weekly chart as well for Caterpillar. So Caterpillar looking pretty good. Let's go to a 5-minute chart so we can see how to trade. What I like to look for on a 5-minute chart is my 5-minute PMO giving me a crossover combined with an RSI that is positive. So this was one of the last buy points over here. And that was at about, well, the price point was about 234.65, somewhere in there. The sell points on a 5-minute chart are when the PMO, the 5-minute PMO starts to turn over. You don't need to wait for the crossover sell signal. Usually when I come to a 5-minute chart and I want to sell, I'm just looking for any good excuse. And a 5-minute PMO turning down is just the excuse I need. So at this point, the buy point is probably not here because the 5-minute PMO is in decline. So there's a good chance we could get a better buy point. But I have to say, when I look at the price pattern here, we do have what looks like a symmetrical triangle. These are continuation patterns. And so it should continue the trend before it. The trend before it was a big decline. So there's a high likelihood that we're going to see this breakdown and you're going to get a better buy point. You can see that we had a fake out here on this move right there. This is why a lot of times it's best to wait for the PMO crossover because you're vulnerable to one of these fake outs. All right, let's start plowing through now. All right, pharmaceuticals here, Eurogen. I like the look, but we do have a filled black candlestick currently, which is a bearish formation. That tells me that I should be able to get a pretty good buy point today. But we'll see on the 5-minute chart. Or if I don't get a buy point today, I should get one next day because of that filled black candlestick. You're going to get a little bit of a pullback and then a move to the upside will give you your entry. So the group isn't doing so well against the S&P, but certainly we're seeing URGN doing just fine up against the S&P and against its group. So you've got a leader within the group. So that's that passes muster. Stochastics rising strongly in positive territory, PMO almost on a buy, RSI positive. All of these things are telling me that this is a good chart. We also have a breakout above this point that's going on. We don't have the breakout here, which is probably why we're getting that filled black candlestick with a little bit of trouble there. I do think this one is a possible buy. We go to the 5-minute chart. PMO is starting to rise a little bit. So we might be at we'd be at a very aggressive entry because the RSI is also still negative. What we'd really want to see for our entry would be that PMO being at least rising. It's really flat right now. It'd be nice to see that get above the 0 line. Certainly a crossover would be best. but we need to get that RSI positive. I prefer not to get involved in things with a negative RSI. And you can see a big sell point that came in earlier today. So could be a buy point coming in here soon, but I think it'd be a very risky, very, very aggressive to be taking the buy point right now. All right, so this is the indicator question, trading based on secondary indicators. So price isn't changing much. All right, so this is part of the deal with the PMO, okay? When price doesn't change too much and you're coming off of a decline like this, you're kind of like, well, what's going on? Why is the PMO moving up? Why are we getting this crossover buy? The PMO is going to tend towards zero. It is an oscillator, okay? So when nothing's happening with price, an oscillator must oscillate. And if it's oversold like this is, it'll tend to oscillate and come back up, even when price isn't doing something great. It did have a nice rally here, so I can see why we ended up with the PMO moving up there. But now price is starting to move back down again. This tells me that this PMO is tending back to zero, not necessarily on a great move. Stochastics are pointing lower. Our new, the relative strength is flat, not very interesting. Even the group is kind of suffering with relative strength. This is not a buy. RSI is negative as well. And it is still a hold. And I will say, even though this is probably the PMO tending back to zero, we still have that opportunity that it maybe isn't just tending back to zero. Maybe there is some actual momentum building under the surface, which would leave this as a hold for me. Let's see, what would your stop be from here? Yeah, probably a 5.5% stop from where we're at now at these lows. Back down here. If you really don't want to lose it and you want to hold on to it and not have the stop hit, then you could go down to the 7.5 range. But I think that this is still a hold. I don't know that I'd have to wait for it to get that low, but at this point, it's a hold. The PMO is rising, but that's when your secondary indicators do come in handy, because the PMO is doing what it's supposed to do, but these are not. So that means it's not a buy, but the PMO is the primary indicator for me. And so if the PMO is still rising, I'm going to probably still be holding it. I hope that was helpful. Fubo. I don't like the way the PMO is flat. Let's make this log scale. I can't really see what's going on with price either. Well, we have kind of a cup with handle-ish look. You know, this is just too mediocre of a chart for me. You know, stochastics are positive, yes, but the PMO is flat. RSI is positive, but the relative strength is really flat. I can't say that I like this chart. It's a hold candidate with a stop. Oh man. Yeah, this is a super low price stock too. I would definitely keep this one off of my radar. And Fubo's been quite an interesting one as far as stock price goes. I mean, it's in the basement here. It's almost penny stock range. I think I would stay away from that, Dan. All right, a lot of these with these little hooks on the end. Very interesting. PMO is starting to top. RSI is about getting into negative territory. Stochastics topping. This is telling me I need to get rid of this stock. It's holding above the 20-day EMA, but I think at this point you might be lucky to lock in a bit of, this is more of a short candidate, and new momentum to the downside is almost here. This is a warning shot. You're getting a warning shot. I wouldn't want to keep this one around. IWM. I know I like the small caps right now. They were really beat down. And so they're starting to see some pretty good love. You can see right here how they're starting to outperform in a general sense the S&P 500. Didn't work out that way so much last week, but I like the look of IWM at this point. I was holding a short for IWM, and I certainly got rid of that one in a hurry. Got a lot of upside potential here. I think IWM looks good. Stochastics have topped, but you know what? It's above 80. I'll accept that, and relative strength is still going well. I think IWM still looks good for a buy. And like I said, upside potential right now is sort of limited to about 6% before we hit overhead resistance. So it would make it probably a little less exciting for me as an investment right now. I think we kind of need to take advantage of some very strong momentum to the upside. And IWM being an ETF too is going to tends to give you a little less upside potential, but it's good for less aggressive investors for certain. And that IWM does look good. CDMO, man, these things are coming in fast. We've got a lot of them, and I don't think I'm going to get to all of them, guys. Okay, it's struggling here at overhead resistance at those EMAs. The rest of the indicators are doing what I want them to do, but I don't like that it can't get above these EMAs. It's just continuing to struggle. It's struggling here at this area of overhead resistance too. I don't think that I'd be a buyer here. I think it's certainly a hold because the PMO is doing what you want. It's holding above the 20. If it drops below the 20-day EMA, I think I would go ahead and sell it and take my profits. I'm not so certain this is an entry point though. Momentum buy ads. You know, where we have the buy signal, I kind of would want it to be a little more new, if you will, kind of cup with handle-ish on the side here. I think there were others that we looked at today I like a little bit better. Okay. Relative strength looking pretty good. Looks almost like a big bullish engulfing candlestick here. Semiconductors looking more healthy. I like Intel here. If I'm going semiconductor, though, I have to say NVIDIA looks pretty good. Although it did get itself a little overextended here. Intel looks even better. I think you picked out a good one. Getting ready to hit overhead resistance, but I'm not really too worried about that given the strength of these indicators. I do like Intel. Since I'm going fast, give me a, sorry if I'm not getting too far into it. First glance, not a buy. It's got the breakaway to the downside, and it's filled black candlestick right now. So it's trying to rally, but it's really struggling to rally. I see this as a sell, not a long. Palantir. Software, remember we looked at that industry group and it's starting to fade, at least on its industry group chart. You can see that the relative strength is sort of topping out a little bit, starting to increase again. And with technology looking better, maybe not the worst place. This isn't a long buy. This has already been on a PMO buy signal for some time, and the PMO is starting to turn. We need to find more stocks like Intel, where the PMO is just starting to give us those buy signals and those moves. This is late in the move. Maybe you'll get a PMO surge where you'll get that bottom above the signal line. That would be a better time to revisit it, but it's very overbought. Looks like it needs a little bit of a pause or consolidation before it's going to move to the upside. All right. We know that BA, I did say, is in industrials. Moving mostly sideways, but it looks like a breakout going on today, which I like. PMO picking up strength. I like this. I like the look of Boeing right now. That's a big bullish engulfing candlestick. So Boeing looking good. And really quickly, FCX, and then I'm going to close it down. FCX buy or sell? It is, in my opinion, a hold. It's holding these EMAs. I think I would set my stop just under the 20-day EMA, maybe a 4% stop on this, 4.5%. But I think I would continue to hold this. Everything still looks good, PMO not breaking down. As far as a buy, yeah, I think you could buy it here with a nice tight stop. All right, that's all I got here, guys. Time to say adios and see you next week. For those of you interested, if you like these trading rooms, you'll definitely want to check out my DecisionPoint Diamond Mine on Fridays. Just become a Diamond subscriber, and that's just included in your purchase. So you'll get an hour and a half with me on Fridays, and I'll look not only at your symbol requests, but we'll also do some mining, diamond mining, and see if we can find some diamonds in the rough on Fridays as well for you to take a peek at moving forward. That's all I've got for you today. Look forward to talking to you again next Monday. Remember, the recordings are posted to YouTube, usually around 3 p.m. Eastern, 3:30 p.m. Eastern, and this does air at 3 p.m. Eastern on StockCharts TV. Thank you so much. Good luck and good trading.